paraphrase Mark Twain, the reports of your demise are greatly exaggerated. And I believe that the community banking model has many advantages and will continue to play an integral role in our financial system.
If you look at the agenda, I think what you'll see is that it really is quite distinct from other conferences. It mixed together researchers, practitioners, regulators, and policymakers.
Through this open exchange of ideas, it fosters a trusted relationship, and I think is ultimately great for a healthy banking industry.
This is also a special year for us because the Federal Reserve and the Conference of State Bank Supervisors have officially welcomed the Federal Deposit Insurance Corporation to join us in sponsorship of this conference. And that is very, very exciting, yes.
So I have to tell you, when I came to the helm of the FDIC, I thought there's this great conference that I've been following for years when I was on the Senate Banking Committee.
As others have said already, it's a really special forum.
The changing landscape of financial services is an important reason for this conference. The impacts of automation on the financial services industry have been substantial in recent years, and the pace of change will likely only increase.
And these folks have done a tremendous job of providing you with a really deep insights into what's going on, or has been going on, in the community banking sector and making capital accessible to small businesses.
Thus, the papers in the session are associated with key policy questions. Are community banks indeed special? Has the decline of community banking led to a funding gap? Did the financial crisis exacerbate the financial funding gap?
The big takeaway here, hey, everyone has to use basically high-touch, staff-intensive practices in order to engage their small business customers.
My name is Brett Afdal from the great state of South Dakota, and it's my pleasure to introduce the 2018 winners of the Community Bank Case Study Competition. Our winning team is from Eastern Kentucky University's College of Business and Technology in Richmond, Kentucky.
As traditionally the case in academics, I want to compliment each of these authors on the quality of their empirical work.
So this paper is focused on a policy question. It's what's the impact of competition on the banking system?
The main issue here is this is a finding to really show that for once now people are reconnecting themselves with the understanding of the ultimate investments of their financial decisions.
So why are we writing this paper? We think community banks should want to know, if it's possible for them to know, how their banks would hold up if we had another severe economic shock.
So, not surprisingly, I would say, as evidence in these papers, community banks do appear to show continued resilience, occupying a niche that's distinct from larger banks, and that technology for community banks does have a nuanced role.
And maybe as things roll on, there's more technology, more easy, quick ways to do transactions, that relationship situation might even get more valuable in community banking. So I'm optimistic about that and for our industry.
From our annual survey on community banks, let me share one key finding. Compliance cost is coming down. After years of going up, this year's survey found that compliance costs for community banks has declined by 13%. There are probably multiple reasons for this decline. Let me offer you one. This very conference has raised awareness among regulators and policymakers.
I'd like to give you all just a little bit of hope in terms of how regulators are approaching and thinking about technology.
One of the other changes that I've noticed in the report over these last few years since we've started asking about technology in the survey is when we started this, it was all around this question of wrestling as whether technology was a friend or a foe for community banking. And when you read through this report, we've made the shift. It's friend.
And I do think the banking industry can compete very strongly, but has to start, I think, collectively getting a little bit better at adopting technology at a faster pace and being able to kind of iterate and experiment a little more.
Some of the takeaways that I'm getting from this conversation is, for the regulators out there, as Kate and Trevor said, maybe there are ways to, not to sound too cliche, to think outside the box in terms of, how you can help your banks be more innovative and do things, perhaps on the capital side, things like that. For the researchers, keep doing what you're doing. And as far as the bankers are concerned, as we've been seeing here, look at fintech as not necessarily a threat, but also as a potential opportunity as well.